Professional angel investors, how do they do it? Hey everyone, it's Wolfgang. I wanted to talk about this investment option that you have when you're looking for a higher return and slightly more, well, it can be a lot more than slightly more risk. Angel investing is generally an investment in a startup company, a pretty early startup company. And you can invest a little bit, relatively speaking, compared to venture capital investments. Angel investing is a smaller investment, but the company is riskier because it's earlier in its lifespan. So it brings up this point, a famous quote by Will Rogers. What do you care more about, the return of your money or the return on your money? So it's basically Will Rogers was a conservative investor. He did not like taking big risks. He liked very safe investments. He favored the return of his money over the return on his money. So some people are like that. There's nothing wrong with being conservative. If you don't like losing money, angel investing is probably not for you. And by the way, none of this should be construed as investing advice. I'm not encouraging anyone to invest in an angel investment fund or in early stage startups. I'm just describing that environment. So the success rate of professional angel investors. These are professionals. The whole idea is we're talking about professional angel investors, people who have the experience. Professional angel investors have a less than 90% success rate. And in fact, it's usually much less than 60% success. So in other words, you're going to lose your investment half the time if you decide to invest with an angel investor who's a professional angel investor. And I'll mention a few of those angel investment funds, the professionals, a little bit later here. But if you invest with one of those professionals, you're going to lose your money more than half the time. And so again, return of your money. Are you more concerned with the return of your money or the return on your money? If the former, you can see the success rate of professional angel investors is low, relatively speaking, compared to investing in bonds or a high yield savings account. This is a risky investment. The returns can be great though, so that's the exciting part about this. So professional angel investors take big risks, but they can get big returns. As an example, Eduardo Saverin, when he was in college, he invested $1,000 when Facebook was getting started in 2004. And $1,000 for a college student is a lot of money, right? So that was a big risk for him, relatively speaking. That was probably a major chunk of the money that he had, maybe all of it. So he invested $1,000 in Facebook, and then eventually he invested $18,000 more in Facebook. So that was an angel investment because Facebook was just getting started. Not too much traction, not too much product to market fit. So by 2012, 8 years later, he owned 2% of Facebook. It was worth over $1 billion. So that is the cool thing about angel investing. It's very high risk, but it's very high return potentially if you make a few successes. So generally, if you're investing as an angel investor, or if you want to make an angel investments, you're best off. This was an exceptional case. Pretty rare that this is going to happen. What happened with Eduardo Saverin? You're probably going to want to invest with a professional angel investor because they have certain things that they do, certain skills, industry knowledge, and wisdom that allows them to make much higher returns on the companies they invest in. So let's talk a little bit about why angel investing has such a high failure rate. So the first problem is when you're investing in a startup company, and by the way, I have a lot of experience with startup companies, and one of them in particular did quite well. It went public. It had an IPO, and the other ones I had mixed results with. So why the high failure rate? Number one, the work ethic of the founders. So in all the startups I've been involved in, I have seen a lot of founders and co-founders whose work ethic is spotty. It's hit or miss. It's sort of a scattershot work ethic. On some days they're motivated, they're doing great work. On other days they don't show up. So the work ethic of founders, if it's inconsistent, that's going to be a problem for that startup. Another issue that leads to a high failure rate: no courage to keep going in tough times. Grit. When you have grit, you can keep going in tough times. No courage to keep going in tough times is another cause of a high failure rate with startups. Another problem, money shortfalls. And let me just say something about this. Keeping going in tough times. What does that mean? Well, in the early days, you may not be, and you're probably not going to be making a lot of money, a lot of sales. And you're probably trying to attain product to market fit. You may be having to change the product or service so that you can start getting sales. And it can sort of be a downer, right? If you're making a lot of effort and you're not making any progress. So tough times come in all different varieties, but probably one of the biggest ones is the choice. Do I do something that I'm sure will have an income, or do I keep taking a chance on this thing we've been working on for quite a while and we still have not made any sales? You know, it's the opportunity cost that leads to a loss of courage to keep going when you're trying to get the thing off the ground, especially if you, if you have no source of income. You ultimately need to find work, and sometimes that can be so consuming that the amount of time you can spend on the startup starts to dwindle, starts to drop, and then you end up dropping it. So I have seen a pretty wide variety of, I've worked with people, we started a software company right out of college, and I quickly went through, let's see here, 1, 2, 3 co-founders before finding one person who was able to stick with it, and we actually started making sales. But I went through, 75% of the people I brought into this software startup, walked away. They did not, they didn't have the work ethic, and they didn't like the lack of success, making a lot of effort, trying things, nothing seems to work. I quit. So it takes courage, it takes grit to keep going when those sorts of problems like low sales, poor product market fit are happening. Another problem can be, like I said, money shortfalls. If you have bills to pay, and you run out of money, you're going to have to do something to earn. And so the failure rate in startups, if you have a founder or co-founders and they run out of money, someone's going to have to keep paying their rent, right? They're going to have to keep paying rent. And so what do? If they can't raise any more money, if they run out of money, the startup goes away. So that leads to the failure, right? High failure rate. The biggest problem is probably product to market fit. Second only to money, running out of money. Product to market fit, a lot of founders, surprisingly, in my experience, they create a product that is sort of a passion instead of, does this idea, this product or service, is there an existing need out there? Can I sell this right away? So the quickest way to find out if you have a good idea is to find 10 people and ask them to pay for it, to sign up for it immediately, right there on the spot. Not ask them, would you, if this existed now, sign up for it, because that's not reliable. Actually ask them to give you like $10 or $20 towards the initial subscription if it's a startup, if it's a subscription-based startup, for example, but try to get people to actually give you money for the idea. If they won't, that's a bad sign. So product to market fit means not too hard to find people who are willing to use your product and pay for it. So 70 to 90% of startups fail in less than 5 years. 70% to 90% will fail in under 5 years. And even startups that get early traction, and there's a bunch of big there's a bunch of well-known startups that had early traction that ended up failing after all. Even startups that get some early traction, in other words, some early interest, maybe some sales, can fail. An example, Vine. I don't know if you remember Vine. It preceded Instagram and Snapchat and later TikTok. Vine was a short form video that had some really decent early traction. And then Instagram came along and disrupted Vine, and Vine went away. So even if you get past all this stuff, work ethic of founders, courage to keep going, money shortfalls, product to market fit, even if you get a gold star on all four of those, you can still run into cases like this with, Vine was an example where early traction was attained, and then the company was disrupted and it went away. So it's a pretty tough thing. 70 to 90% of startups fail in under 5 years. And we go back to what Will Rogers said. He was more interested in a return of his money versus a return on his money, right? So a lot of people look at angel investing and say it's too risky. We're going to lose the money more than half the time. Okay, so this is the type of investment for people who can say it's not really a pure form of gambling, but it is a type of gambling because you really can't predict the odds of a startup. You can study it, you can study the process, you can study the founders, the idea, and you still can have a hard time predicting whether you're spending money on something that's going to make it. So if you're a conservative investor, again, this is going to be a tough investment to make. But if you have money and you're willing to contribute a small portion of your liquid net worth on several of these ideas, one of them can make it and can be a really big deal. Eduardo Saverin invested under $20,000 in Facebook. It ended up making him a billionaire. So there's a really cool story if you look that one up. So let's talk about professional angel investors. How do they improve these odds? 70 to 90% of startups fail. Well, professional angel investors can improve on those odds. They can get to 50% success or close to 50%. So professional angel investors have industry knowledge and, more importantly, networking contacts to improve those odds, to improve these odds. If you have a lot of contacts, here's where a network of contacts comes in handy. Finding investors. Running out of money shortfalls is a big cause of the downfall of a startup. If you have a big network of investors or an ability to successfully crowdfund your idea, or help someone else crowdfund their idea and invest in them. Also, professional angel investors, they know how to avoid these sorts of founders. Poor work ethic, or founders who lack grit, who are willing to keep going even when the chips are down. So professional angel investors can spot talent, and they can ask the right questions of founders, and they know how to avoid founders with a poor work ethic and who lack grit. Because they have a lot of experience. Professional angel investors have been through a lot of companies, and they know what to look for and what to avoid. They're not perfect either. In fact, professional angel investors, if they can achieve a 50% success rate, that's really, really good. Because again, 70 to 90% of startups fail in less than 5 years. So these angel investors who are professionals at this, who have a lot of experience, they can get close to 50% success rate. So another advantage a professional angel investor has is their professional networking contacts. They know people who can step in and act as managers for an early stage company that can help the company grow. Networking contacts who have industry experience. Can you please join this startup to help them get to the next level of revenue, hit the $5 million mark in revenue? So again, having a great networking skill is one of the things that professional angel investors generally have. So here's some of successful angel investors who have gotten pretty close to or exceeded a 50% success rate. So SV Angel, SV stands for Silicon Valley. They were early investors in Twitter, Dropbox, Airbnb, Foursquare, and a bunch of other ones. Founders Fund, that's Peter Thiel's angel investment group. He was an early investor in Facebook, in Airbnb, in SpaceX, in PayPal. Spearhead is an angel investment fund run by Naval Ravikant. He's had 70 successful exits out of 200 plus investments that he made. So 70 out of 200, that's not quite 50%. That's about 35% roughly. 35% success rate, though, is really good considering 70 to 90% of startups fail. So that kind of gives you an idea that if you want to take on a riskier, higher return investment, professional angel investors can give you an edge. You can do research to find them. One way is to, do a search online for angel investors exceeding, 25% success rate. And then you can get a list and you can figure out who to invest with. Because the thing is, these guys don't know either. They have a lot of skill. They have a lot of industry experience. They have a lot of contacts to help them raise money or join the startup to help it grow. But even professionals don't really know. So one strategy you can use if you have money to invest and you want to commit a portion of your liquid net worth to this kind of investment is you can say, I'm going to take $1 million of my liquid net worth and I'm going to divide it into 50 investments, right? 50 investments. And you're probably going to have, out of those 50, you're most likely going to have some winners, right? So you can say, divide the $1 million 50 ways, And you don't have to put 20,000 exactly into each one because some will sound more promising than others. But that would be a way to say I'm taking $1 million of my liquid net worth and I'm taking 50 chances here at having a big success like Eduardo Saverin had. So the caveat to this kind of investment, though, I just want to review this because, like I said at the beginning, this is not investment advice. I'm not trying to encourage anyone to invest in angel investment with professional angel investors. So, because very few people can tolerate losing money, even wealthy people. A lot of wealthy people do not like losing money. If you think about what Warren Buffett says, right? He says, rule number 1, do not lose money. Rule number 2, never forget rule number 1. He's a very conservative investor. He does not invest with angel investors. He doesn't do it. And he's extremely wealthy. He's worth like over $250 billion. He only invests in fairly sure things that have already existed for a while, that are long past their startup days, that are earning revenue, right? So very few people can tolerate losing money, even very wealthy people. And people who try this, a higher risk, higher return investment, contributing money to join a professional angel investor, people will try that once, maybe twice, and if they have 2 losses in a row, they're done. They're not coming back to it. They don't like losing money. Again, the way to make this investment is, especially if you know you dislike losing money, even if you have a $20 million net worth, if you say to yourself, I'm going to take $100,000, I'm going to divide that into 10 investments, 10,000 each, and I'm going to see how that works. And you invest 10,000 with 10 different professional angel investors. That way, if you lose your 100 grand, right, it's a small percentage of your net worth, of your 20 million. So that's one way that people do this when they know that that they hate losing money, is they commit a very small portion of their liquid net worth to try this. So. And again, the example of Eduardo Saverin, just to drive this point home, this was a rare, exceptional case that almost never happens. It was just a luck of timing. He was a Harvard student when Mark Zuckerberg was a Harvard student. He was 1 year ahead of Zuckerberg, and they met. And Saverin was an economics major, so he was sort of well suited for the business side of things. Zuckerberg was a software guy. So this almost never happens. Okay. So again, this is not encouraging anyone to invest in professional angel investors. But if you want to, you can find these people online. The one thing I would recommend you definitely don't do is try to do this on your own. Unless you're a software engineer or you're a business person, if you're sort of an outsider to both of those sorts of situations, but you want to try angel investing, find a professional angel investment group. And if you want to make several investments, find a few of them, and you'll probably hit one success, and you'll probably make some losses too. So you have to go into this eyes wide open. You're going to lose your investment, probably more than half the time. If you have any questions about this, I do have some relevant experience with this. I've done this myself throughout my career. I'd be happy to answer any questions you put in the comments. And I really want to thank everyone for watching, and have a great day.